Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Monday, June 21st. Great to have you here as we start off another week. I'm your host, Jesse Allen. Thanks for joining us. MarketTalkAg.com. That's our home on the web, MarketTalkAg.com. It's where you can find all of our streaming sources, our YouTube videos, past episodes, ag news, market info, and much more. It's all online, MarketTalkAg.com. Well, we had a bit of a mixed bag today. Some good strength in the soybean and bean oil complex to talk about here as we start a new week. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here on this Monday afternoon. And Bryan, good afternoon to you, sir. And, we came in the overnight session. Everyone was watching those rains or lack of rains in some areas. We started to trade those. And then, we came back and through the day, found some decent support with a couple different factors. And as I mentioned, that soybean and bean oil complex was kind of the highlight of the day on Monday.
It was, and very welcomed because bean oil just got savaged last week. Kind of started the week before when the administration talked about maybe revising or something with blending credits, and we're still not sure what the news is on that, but it certainly took the wind out of the sails of a very strong looking soybean oil market, but the whole biodiesel complex as well as corn just hammered it pretty hard. At the same time, though, we came into this week with a good forecast or good shot of rain, a vacillating front system that was going to put some rain in the central Midwest, and it has. As you said, though, there and I don't know if you use these exact words, but it kind of the haves and have-nots, because this rain, once you get kind of west of central Iowa and Minnesota, it was non-existent, and it looks fairly sparse for rain in the forecast, and that is probably the other underlying factor helping to provide underlying support for the bean market early in the week. Corn on new crop factored in, I think, some better weather conditions, losing about a dime.
Yeah, and looking at weather in general, you mentioned kind of the haves and have-nots, and I know there's some more rain in the forecast here later this week. We have some cool temperatures to start the week before we start to heat back up again to give us a little reprieve on the drought and the stress on the crop. But I'll be curious to see those crop progress numbers here this afternoon from USDA. I don't know if they're out quite yet. I'll be curious to see those and how that factors into where we trade overnight and into Tuesday and the updated forecast, because as you mentioned, some areas got great rain and there's still plenty of areas that could have used more.
Yeah, and the crop ratings might be a little deceiving this time of the year. If you're in part of the haves, you've got some rain, it'll spruce things up. All of a sudden, crops look really good. But if you're in that, let's say again, let's just call it the western half of the entire corn and soybean belt, subsoil conditions are really suspect and really low. And so you may spruce it up. But again, as we talked the last several weeks, it'll take continuous sort of rains along the way. One theme that I'm going to go on a little bit of a limb here and maybe argue is that even with the rains that fell now, there were some really nice copious rains, but in conversations with customers, I want to say that the totals probably didn't quite live up to expectations. So if somebody was looking for 1 to 2 inches, they got 3/4 or 1 1/4 or something. We're not hearing that, oh man, they called for a couple and we got 4 inches. We're just not hearing much of that this year. So boils down again to subsoil. Big reprieve in the temperatures this week. So, big shift from what everybody was kind of running into a week ago and 10 days and 20 days ago. So we've got rain on tap here, maybe end of the week. We'll see what that looks like. After that, 6 to 10 days, that western corn belt again, below normal in precipitation, above normal in temperature. Kind of a tough area. And then we'll get toward the end of the month, we're going to have the big stocks and acres report.
Yeah, and I was just going to mention that, we're about 10 days out from that stocks and acreage report here, and that's going to be very, very key. It seems like we're going to, trade weather for the most part up to this, barring any other major headlines. But that stocks and acreage report, I think, is going to be one that obviously we're looking for maybe some changes to some numbers in that report. And I know people are watching maybe corn acreage going up. But again, that report, whatever changes are made, Brian, definitely going to have an impact on our market trade here moving forward. As we saw last week with the big shifts down, and then we bought back. But that report is going to be very, very key to I think what our price outlook is going to be for the rest of the summer.
Yeah, we're just in the critical zone right now. Basically, you can kind of say 1st of June to the 15th of August. I always say about 15th of June to the 15th of August really sort of sets, where we're going to go the next several months after that. And yet, we're kind of in the thick of it right now, trying to figure it out. So, some of these wonderful rains here are going to carry people deep past the 4th of July or beyond. Others are really going to need things by the 4th, or you're going to start really penciling in crop loss, maybe even sooner than that if the temperatures heat back up. The stocks number, boy, trying to shoot at us, as they say, trying to shoot at a flying duck. You just don't know which way that's going to zig or zag. The basis levels this year would tell us that the stocks number probably shouldn't be surprisingly negative. It should be, what the market expects or lower. Acreage number, Jesse, I can't get away from it. On May 7th, the corn market was peaking right in the heat of planting season, drier weather, good progress. I know fertilizer costs were up. I know inputs, are part of that mix, but when you see that ratio from corn to beans go from 2.65 November beans divided by December corn to 2.25 in a couple of weeks, now it's telling you to plant corn. So I've got to expect that farmers, whether they're looking at that ratio or just intuitively are going, I can get this much for corn dollars per acre. I'm going to plant some more corn acres. I think fringe acres went more to corn.
I would agree with that. I think fringe acres did go more to corn. It'll be interesting to see what happens with those numbers in the report, and if we can, find some of those fringe acres to maybe try to make up for some areas that are experiencing heat and dryness and possibly crop loss here down the road. Another thing, though, too, you mentioned stocks, kind of tough to pinpoint. It's like hitting at trying to shoot at a flying duck. China stepping back in here today. Those rumored new crop soybean purchases, got those on the books. I look at export shipments here, or inspections, I should say, and shipments. I mean, corn was good, but not a whole lot was shipped for soybeans, wheat, sorghum to China during the week. I mean, but I was pleasantly surprised to see that new crop sale on the books here today.
Yeah, if you total the sales, if I did the math right, it's about 500,000 metric tons. Or let's just call it around 20 million bushels. That's a good number. So when you get 20 million, it's a good number, particularly in soybeans. It's a very good number. So good to see beans responded positively. That's good to see. Got some rebound there, like you said, in the meal and the oil. Those markets got beat up and savaged pretty hard. So maybe buy opportunity there. All of our critical weather for soybeans, I'm going to say most all of our critical weather for soy is yet ahead. So, it's not in the bin yet, I guess is my point there. Export inspections, corn 58.3. Here's the irony of the numbers that you just kind of mentioned is corn right now is at 76.7. So let's say 77% of projected export sales have been inspected. Pretty solid. We're on a pace to meet that level. In soybeans, we're 91.8 or 92%. So the numbers don't have to be that big for soybeans, but we'd sure like to see them pick up just a little bit to kind of give us that confidence we're going to meet that 2.280 billion. Right now it's 2.094. So it's about a little less than 100, a little more than 170 million bushels, about 180 million bushels to go. So I'd like to see some bigger weeks in there. We get a 20 or 30 million in there just to really solidify it. But corn's on a good pace. We think the corn number will likely strike. We think both will strike, but sure get a little more comfort zone if we can get this bean thing moving a little faster.
Definitely agree. I'm sure you were fielding plenty of calls last week with the big drop, and then of course the buyback on Friday. Coming in here to Monday after we get some updated forecasts and we trade here the first day of the week. What have you been hearing from producers? Are there any reoccurring questions out there, Brian?
The first producers I heard from today were really the guys that couldn't understand why the overnight was down. It's like it was, and then we came out of the pause session, bang, right away, 20 plus lower on corn, when they're not seeing any rain or moisture, and they're like, "Well, we got to count for something, for goodness sakes." So, so that's a reoccurring theme, and that's that time of year where they're needing more than a forecast for rain. The other recurring theme here was really kind of the quiet side, and that would be the guys that were kind of looking for moisture, rain. They got some, so they're not boasting, but they got their crop moved along. It shaped up a little bit. I'll go back to that. That corn crop is just a wonderful, wonderful crop or plant that can struggle with June dry weather because the plant isn't that big. It doesn't use that much moisture in June. And then if you can get some timely rains, can really come along. And I think the theme we'll see is the ratings. I don't know what they'll do. I'm guessing they'll drop off because it was so warm early in the week and looks so tough. But next week they could pick up in some states, lose in others. But I'd be willing to bet that you'll see that, the crop all of a sudden comes along really fast in areas. And that's what a little bit of rain does for you. If you're in one of these pockets that got 1 inch or 2 inches of rain, it's going to give it that rapid growth right now. I think the common theme, though, is just guys don't really know what to do as farmers. They've sold enough. They don't want to sell more until they get more rain. You're getting more rain, but now the price is off. It's all this confusion. Guys out west don't want to sell anymore than they already sold initially. They sold at good prices. Now prices are even better, even they're off the last week. They're better. So the theme is probably uncertainty. And if you're feeling that way as a farmer, you're not alone. My suggestion is just to take some time and just re-strategize on it and make sure that you're looking at all the tools. You're an inventory manager, so you're got to really kind of work at it this year.
And I think, one of the most popular tools we talked about a lot is protecting your floor and leaving that top side open, maybe with some re-ownership, just to give you that flexibility. Flexibility seems like that's the key word in marketing here this year, Bryan.
Well, flexibility, but flexibility comes from knowledge. Knowledge is power. Knowledge is strength. Knowledge is comfort, whatever you want to call it, but knowledge helps. So if you're, again, an inventory manager, recognize that, hey, we're going into the end of the month, traditionally kind of a tough time for prices to go up unless it's brutally dry. Well, some are, some aren't. And then we can crash pretty hard. Well, we've already started that, but is there more to go? If you think about corn contract, we're trading December corn, 557. So I'm just going to say around near 550. At the end of March, we were near 450. So if we pick up acres, why can't we go back to 450? We can. So think about how you want to defend that and use the tools. I guess what I was driving at, you talked about a put option, putting a floor and leave top side open. Maybe it needs to be a short dated option, which is a shorter amount of time you're buying, but it's based off December futures. So a August short date put is buying August, an option that expires in July and not December. So you're spending less money on the overall cost of the put. You're giving up time versus a December put. Yeah.
Sure. Bryan, let's move over to livestock. This hog market continues its implosion here today as we seem to be correcting from the recent highs. We were down limit in the August contract today. I know Chinese pork prices continue to tumble. There's some signs that the domestic supply lines here have been filled. I mean, what are you seeing in this hog market right now with another down day, aggressive down day here on Monday?
Yeah, it kind of looks like the bean oil market too. That just went up and up and up and just finally hit a top. And if you overlay the hog market with the U.S. dollar, the soybean oil U.S. dollar, they're inverses of each other is what they are. So you've got that impact. Yeah, we talked about after euthanasia last year and reducing the herd and then having supplies backed up. We'd get through the supplies and then you get into a window where hopefully you got better demand, COVID kind of on the downslide, and we got all of that. And then you just get to a point where you get a reversal in the market and it's technically well overbought and your stochastics crossover or some other signal if you're watching that, and none of them have pointed the buyout yet. So more liquidation for people who have been long, liquidation for those who bought trying to catch a bounce, who haven't, and more importantly, probably those who sold up higher, adding to positions. So it's like any other market, all of a sudden everything pile drives it, and that's where the hog market is right now. I think the cash needs to find itself. We had hogs way too high compared to cattle. There was a rare point in history where we saw hogs higher price than cattle, and that just doesn't last. So to start seeing these two inverse of each other here the last couple of weeks doesn't surprise me.
On the flip side, cattle were pulled lower today by the hog market, but the cattle side finally finding a little bit of a spark, at least here, as we been working through the last week or two, finding some better cash sales. What are your thoughts on this cattle market here as we move towards the end of June?
Really haven't changed much. Generally supportive, but it's not going to be all straight up in cattle. The cattle are not going to mirror the hog market. It's give and take on all of this. We had the big surge, and then all of a sudden quickly gave back about half of that really fast. So that's the volatility in the marketplace, and that's what happens when you get, a huge upswing in 1 week on the U.S. dollar, and all commodities kind of get tanked and crash. But if you look at cattle as a whole, if you just look at where August is right now, 120, 102, but the last couple of days we've spent some time either side of 122. And if you go back to, let's say, the previous several months, generally we've been around 118, 117. So we're picking up that $4 to $5 with some volatility in there. But I think we continue to see that happen. I think the back months, the futures have it right. They're trading at a big premium, 135 or so. We think those will continue to find support, probably target well above 140 eventually. That comes on the heels of continued rebounding in the demand sector from the just the whole COVID thing and cattle getting backlogged and getting more cattle through the pipeline and getting their weights down. Yeah, all of that.
Bryan, how about the dairy market? Let's get an update on that. Anything you're seeing there as we start this week?
Yeah, it continues to look pretty rough is what I'm seeing. It's just a real hard just a real hard technical slide, as well as concern that oversupply is maybe going to be a little more paramount. We saw previous production reports really not healthy. It showed us that the herd was expanding, but all those government programs during COVID, box lunch programs, good milk prices, and even at that time, cheap corn prices. So you've got to believe that the herd expanded, and it has expanded. And now you're seeing the effects of just too much inventory, too much supply, cheese prices under some pressure here. We just don't see a lot of whole, let's say, vision of a big turnaround in the milk. I know there are some people that were kind of supportive, thinking, well, commodities as a whole, inflation, all this kind of stuff. Milk usually doesn't participate in that.
Bryan, appreciate the time. As always, any other final thoughts you have for us or anything you want to reiterate on this Monday?
Yeah, I'll just reiterate some very large reports for your grain producers coming in front of the market here in 9 days. It'll be out on the 30th, 11 o'clock Central Time. So, preparation is key, and they say prior planning prevents poor performance. So just kind of have yourself prepared that anything can happen on reports. And I'd make the argument the corn crop has a long history of kind of on the verge of the point of no return, and it returns, and it does well for people. So if we can get the right mix of weather, yet the chances of really heavy supplies is real, because it looks like to us the acreage report comes up. So it's just that planning and preparing for, as we talked before, looking at your different option strategies.
Well, I know if people need help with their planning, want to reassess, they can reach out to you and the team at Total Farm Marketing. You can check out the website or give you guys a simple phone call. I know you guys like that a lot.
We do. There's nothing better than just having a conversation. Conversation you hear more than you hear, if that makes any sense. So 800-334-9779. Give us a call, or check us out on our website, and let us know if we can be of any help to you.
And that website, totalfarmmarketing.com. Bryan Doherty, thanks for joining us on this Monday. Have a great week, and we'll talk to you next week.
Awesome. Thank you, Jesse.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk, brought to you by GrowMark FS. This has been the Monday, June 21st edition of the show. I'm your host, Jesse Allen. Have a great afternoon.